So I haven't uploaded in a while. Been fighting a flu or a cold. Been coughing fire for some reason. But anyway, so in this video, I want to talk about how much I've received in dividends and in selling call premiums just for the month of February, so we can compare. So on the Questrade, I'd go in accounts, reports, account activity, and then I'm going to choose from February 1st to March 1st just to make sure that February 28 is included. And then I'm going to export to Excel, which I already did. And then I'm going to filter on dividends here under action. So you can see the total here for February just in dividends is $301 Canadian. But sadly, this is not going to be monthly because most of these dividend payers are quarterly payments. So every 3 months. So you could say on average it would be around $100 a month. Ford is every 3 months. AltaGas is actually monthly, but it's $8 here, as you can see. Vodafone is once or actually twice a year. So this is not even every 3 months. General Mills is every 3 months, but I sold it. Ford is every 3 months. Enbridge is every 3 months. AT&T is every 3 months. Intel as well, but I don't have it anymore. Actually, that's interesting. This was actually part of a call. This stock I bought this is a stock I bought just to sell a covered call on, but I was actually able to collect a dividend at the same time. So I sold a call premium and I collected a dividend at the same time in a 1 month period. Bank of Montreal is every 3 months. Vermilion Energy is every month, but I got rid of it. Apple is every 3 months. MasterCard is every 3 months. Got lucky, $2.23. And Dollarama is every 3 months as well. So in total for the month of February, I collected 301 Canadian dollars. And now if you compare the call premiums that I received in February alone, so I'm going to choose everything here, and then over here I'm going to choose call. Then I'm going to choose buy and sell. So for the month of February, I collected $12,918 Canadian by selling call premiums. So a little bit more than $300 if you're going to compare it to dividends. Now, we can't just look at the amount of call premiums collected because some of these are in the money positions, meaning when the underlying stock gets called away or sold, it will eat up some of the call premiums that I already collected. So I collected some call premiums up front, but they're going to get lost when my shares get sold at a lower price. But the difference is still positive. In most cases, it's about 7%, from 7 to 20%. Now, in the case of Novavax, of course, if you watch my previous videos, this was a terrible trade because it was very risky. But if this trade went according to plan, I would have made about 30% profit on that in about a month. But instead, the stock dropped 60%. So this is a stock that I bought at an average price of 1.96, but I immediately collected 81 cents for it. And I did that in order to sell the stock at $1.50 come March 15 if the stock is trading above $1.50. Since I bought it at $1.96, I said to myself, well, it's got a pretty good chance of staying above $1.50 until March 15 because it would have to drop 30% in order to drop below $1.50. So I said to myself it had a good chance of staying above $1.50, and I collected 81 cents. So my cost is actually $1.15. So even if I collect $1.50, I'm still profitable because my cost is only $1.15. So that 35-cent difference is my profit. 35 cents divided by $1.15, it was a 30% profit in 1 month. But instead, Novavax decided to drop all the way down to 59 cents, as you could see here. Now that it's below $1.50, my shares will not get called away. I'm going to end up keeping the shares, but now I own shares that are down 70%. Dollar-wise, they're down $4,000. But I do keep all of the call premiums, and I have the choice to either wait for the stock to come back up, and while I wait, of course, I'm going to try to sell another call option on this stock. And if we look at it right now, actually, you can see that for April, now remember, my cost is $1.15 after collecting the call premiums, so I don't want to sell lower than $1.15. So the two available strike prices will either be $1, which is lower, so I can't go for that, or $1.50. I could go for $1, but that would mean that I would have to hope that Novavax does not end above $1 come April 18. So I don't want to hope. So I'm not going to take $1 and $1.50. There's nothing. No one's buying. So I'm going to have to go another month out. So if I go for May 17, $1.50, again, no one's buying. If I go July 19, we've got 5 cents here. So I could probably sell July 19 call option for 5 cents, or even try to go for 10 cents. And that would reduce my cost basis. So instead of my cost being $1.15, it'll be $1.10. And now instead of waiting for Novavax to go above $1.15 for me to be profitable or to break even, I just needed to go above $1.10. So let's say I was able to get 10 cents. 10 cents on $1.15 is about 8% in 3 months. So April, May, June, July, actually 4 months. So it's about 2% a month. But this obviously it's not bad given that I bought a stock that dropped 70%. So normally I wouldn't do that, but I went for this trade because of the crazy call premium of 30%. Now, if we look at the other stocks I've got PTI here, which is also another pharma stock, which is also very risky. I think this one was giving me a 20% profit, but this one is actually profitable. So this one's not hurting me right now. As you can see here, I bought it at 3.99. I sold call premiums at $1.65. The stock right now is trading at 4.44. So right now, this is going to be a positive trade unless come March 15 something crazy happens like Novavax. So there's still a possibility for the stock to drop 50% like Novavax, but right now it's going according to plan. So with this trade here, I bought for 3.99, collected $1.65. So my cost is 2.34, and if the stock is trading above $3, come March 15, it's going to get called away at $3. So I would sell the stock at $3. So I'd make a profit of, or a return of 28% in 1 month if the stock is trading above $3 come March 15. So I really need this stock to stay above $3 above come March 15. Right now it's at $4.44. So it's got 8 business days to do that. Hopefully it doesn't betray me like the others. And then we've got L Brands, $124 here. So this is an okay trade. I mean, it dropped after earnings, but then the next day it went back up. So I bought this at 26.2. Right now it's trading at 26.93. So the call and the strike that I sold it at was 27.5. So I could, if it stays this way, I will probably end up keeping the shares, and I can sell call premiums again. So in this case, I collected $1.05 on a 26 and 20 investment. So 1.05 divided by 26.2. So about 4% in 1 month. And then Chesapeake Energy, I don't know how to pronounce it. CHK, collected $103. This right now is also looking good, if no surprises. So I bought it at 2.8, collected 9 cents. Right now the stock is trading at 3.14. I sold the $3 strike price. So at this state, it would get called away because it's trading above my strike price of $3. And I'd be profitable. I think the trade would generate about 8%. Let's calculate it right now. So I bought it at 2.8 minus the 9 cents that I collected. I'm at 2.71, and the stock would get sold at 3. So 3 divided by 2.71. So that would be 10%. And this is actually in about 3 weeks. So this would be a good trade if the stock stays above 3. If it drops below 3, well, I'll keep the call premiums, and I get to try and sell call options again the following month. Then you've got IMGN. So this is similar to Novavax. So this is another one that burnt me. This is a stock that dropped 50% as well, but I collected $819. So as long as I don't sell the stock and they didn't really lose, I collected these high premiums that I get to keep. But obviously I own a stock that's down 50%, but I can try to keep selling premiums on those stocks until the stock recovers. I've got Teva Pharmaceuticals, collected $216. I mean, it's not so bad. It is dropping though. It's trading at 16.73. So it dropped more than 10%. So I'll end up most likely keeping the shares, but I can easily sell call premiums the following month. Got Kraft Heinz. This one was probably not too good. I'm gonna end up keeping it, and I'll try to sell call premiums again for the following month. I've got Overstock.com, collected $763, but I went in the money. So I bought it at 20, but I'm going to sell the shares at 18. If the stock is trading above 18 come March 15, they'll get sold at 18, but I bought it at 20, so I'm going to lose $2 per share, but I already collected $763. I have 200 shares, so I'm going to lose $400, but I collected $578 already. So I'd make $178 profit on a 4,000 investment. So I bought the stock at 20, forgot how much I collected. So I bought the stock at 20, collected 295, and then I'm going to sell it at 18. So collected 295, so 18 divided by 17.05. So that's 5.5% in about a month, I believe, as well. Actually, this is actually expiring this week. So 5.5% is not bad, especially that it was an in the money call option. Plus it's on a stock that I have no idea what's going to happen to it. So I've got my Weight Watchers here, that if you watch my video on it, so I'm down a lot on the stock as well, almost 30%, but I collected $934 Canadian from it. I've got Ascendis Pharma. So this is another pharma that's doing well as opposed to Novavax and IMGN. So this one actually went up 60%. So this went the opposite direction. Instead of dropping like the others, this one went up 60%. But because I sold in the money, it's not gonna matter. My potential profit does not change. My max profit is about 8% on this stock. So here it is. I bought the stock at 72.3. It's trading at 125.4. But that's not gonna matter because I sold a $50 call option against it. So as long as the stock is trading above $50 come March 15, my shares will get sold at $50. So I can't take advantage of this 125. But that wasn't the plan anyways. My plan was to make a predetermined amount of profit in 4 weeks. So by buying it at 72.3 and collecting 26.3, my cost is 46. I'm going to sell at 50. So my profit is $4 divided by 46. So that's an 8% return in 1 month. And by actually taking a $50 strike price, I'm giving myself downside protection. But in the case of this stock, it actually went up. I should have taken an out of the money call option to take advantage of this capital appreciation. But of course, I didn't know what's going to happen, but I did know that I can get 8% easily. So I've got Macy's that I think it's the second month I'm selling, and we'll probably have third month opportunity to sell without losing my shares because it looks like it's going to stay below $26 come expiry date. So collected $100 from there. Got Groupon, collect 46. Six Flags as well, collected $183, and it looks like I'm going to end up keeping the shares because the stock is trading below 55. The strike price that I chose was 55. Right now it's trading at 53.47. So that's one thing that's great about covered calls is you get the benefit, you get the profit from the stock even when it doesn't do anything, even when it just moves horizontally. You get to extract something from the stock every month while you wait for it to make a move. JD.com is most likely going to get called away for me. Collected $147. SNC Lavalin is probably going to get called away as well. Collected $134. AMD, not sure. It's pretty close to my strike price, but I collected $183. So yeah, in total call premiums collected for the month of February, almost $13,000 Canadian. But obviously you have to factor in the stocks that are down almost 50% and the stocks that are going to get called away at a lower price than the purchase price. So just want to share with you how much I've made from covered calls and dividends in the month of February, and really trying to show to you the power of writing covered calls if used correctly, of course, not in the greedy way that I'm using it and the risky way. I regret buying these pharma companies, even though two of them are performing well, but that's not going to be the case every time. And they actually still have a chance to betray me before expiry date. So if I ignore the pharmaceutical companies, let's see how much call premiums I would have collected. Yeah, so if I ignore the pharmaceutical companies, premiums collected would be about $4,000 Canadian. So big difference, but still much better than $300 of dividends. So I'll try to make a video exclusively on why I love writing covered calls. But for now, I just wanted to show you the numbers on the dividends and call premiums received in February. So if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. Also, it is tax season. If you're looking for an accountant to do your taxes, don't hesitate to message me. Link will be provided below. Thanks for watching.